In this video, I'm going to be explaining how charts work in cryptocurrency and how you can read charts and use that to make money in crypto regardless of which direction Bitcoin or the rest of the cryptocurrency market is going. I'm also going to go over a few simple but very reliable chart patterns that even a beginner can look for to get started in charting and making money with charting in crypto. And then at the end, I'm going to go over a few important people who you should be following who have been reliable and very good at calling where crypto is going based on charts for quite a few years now. So we'll talk about that at the very end. Let's dive in. First, let's talk about a few different kinds of charts. As you can see right here, this is what we're looking at is called a line chart. And as you can see, it just kind of shows general lines. You can get a rough idea of where the market is heading and where it's going with these kind of charts, but they don't give you a lot of data. The chart that's most commonly used by people that spend a lot of time charting is what's called the candlestick chart. And if you see this might look a lot more familiar. Now let's dive in and talk a little bit about what each one of these pieces of a candlestick chart means. The first part of the chart is the time frame. So you can see each one of these is a little candle. It's a red or green candle. And up here is where we can see the time frame. By the way, if you're looking to create a chart or see a chart for a specific currency like the one I'm showing you on the screen, you can go to coinmarketcap.com, go up to the top and type in the name of the currency. Then you can go down here and it'll show you a basic chart. And when you click trading view, you can view a chart like what we're looking at right now. Now let's talk a little bit more about the parts of this candlestick chart. Each one of these candles represents a specific time frame. Now you can see right here, I currently have D selected, which means day. That tells us that each one of these candles represents one single day. I can click here and click hour, or 30 minutes or 1 minute. And that tells us that each one of these candles represents 1 minute in the price action of this particular coin. And in this case, as you can see right here, we're talking about Bitcoin. Now let's zoom in and look at each individual candle and see what it's trying to tell us. You can see I can zoom quite a bit in and we'll look at this green candle right here. You'll notice that there's green and red candles. What that tells us is whether the price of that particular coin ended higher or lower than it started that day. So you can see right here, this particular coin, Bitcoin, went up this day. It was higher than when it started. Now it might have done a lot during that day. You might have seen it go up and down 100 times, but the price ended higher than when it started. And you can see the red one here is the exact opposite. It ended lower than when it started. Now we can look even deeper and we can know that on a green candle, the bottom of the actual candle, okay, the part right here, so this part that's above the wick, that's where the price started that day. The top of a green candle is where the price ended that day. On a red candle, it's the reverse. The top is where the price started that day. And you can see right here, it of course started right where that green candle ended. But at the end of the day, it had gone down to here on that red candle. And that's where the price of Bitcoin ended that day. Or in this case, sorry, we're talking about minutes because this is the minute time frame. Now let's talk a little bit about these wicks. You see these long wicks sticking out from each of these candles, both on the top and the bottom. That's where the price went during that time period. So we're talking about minutes. During this particular minute of this day, right, the price of Bitcoin started the minute down here, it ended the minute up here, but during that minute, the price went all the way up to here and it went all the way down to here. So it was a crazy minute, right? The price of Bitcoin was all over it. At one point during that minute, it was $40,484. And at another time in that minute, it was $40,800. It was a $300 price swing in the period of a minute. And lastly, most charts you'll see at the bottom come with volume. This is just telling us how much of that coin was being traded. Okay, so you can see right here, this was a lot of trades. There was a lot of action happening in that minute. That's probably why the price was swinging all over. And you can see during this minute down here in the bottom corner, or in this minute in the bottom corner, not a lot of buys or sells happening. And typically you'll see that there's a lot of volume or a lot of buys and sells happening during the big movements on the candles. You'll kind of see these match up. You can see here when the price took a huge dip, it's because a lot of people were selling Bitcoin. So you can see already we're starting to get a little bit of an idea of a story of what's happening with Bitcoin. You can see right here a lot of volume, meaning a lot of purchases happened right here. And that's what drove that price up because someone made a big order. Someone was trying to buy a lot of Bitcoin and the price spiked for a minute. And then it tended to go right back down again. You can see there was no one else willing to buy at that price. Now let's zoom out a little and look at this Bitcoin chart and explain exactly what we're doing with charts. You've probably heard the word technical analysis. And all technical analysis is someone will look at these charts in a specific time frame and they're going to try to figure out where the price is going based on what they're seeing. They're patterns. Okay, we're looking for patterns in these prices. And the simplest example that I can give you is if you look right here, this is a large time frame, right? This is August of 2020 all the way until now, and this is being filmed in 2022. You can see the price of Bitcoin went really high, and then it dropped all the way down to about $29,000 in the middle of January. Then the price continued its climb. And then right here, we had a huge drop, right? And it dropped. And look, lo and behold, it dropped to the exact same spot where it dropped here. Okay, and you can see it dropped almost to the exact same number, right at 29,000, and then it turned around again. Now, this is a very simple example of technical analysis, but it's what's called support. We're looking at this chart, and we're seeing that there seems to be some form of support at 29,000, where whenever the price of Bitcoin hits that price, it starts to go back up. Now, if you were a chartist looking at this right now, and you knew what you were doing, you would probably say that the price of Bitcoin is going to hit 29,000 one more time and then bounce. And in fact, there is a lot of chartists and technical analysts that are looking right now, and they're putting in buy orders at $29,000, saying they will be willing to purchase Bitcoin when it hits $29,000. And so these charts are giving us an idea of what most investors are thinking, right? It seems like most investors feel like Bitcoin at $29,000 is a good deal. That's where they're willing to buy. Okay, and it seems like right about $60,000 or $65,000, most of them are thinking that's a high point. And so we can set our buy orders in here at $29,000, and we can set sell orders somewhere right around here and see if we can capture each time it does those big ups and downs. Another simple example is you might look at this volume down here and you might say something like, it looks like when it was going up before, it was because the volume was exploding. A lot of people were buying into Bitcoin. But when we go over here where the price is currently going up again, it didn't have as much volume. Meaning there was less people getting into Bitcoin, that the price wasn't necessarily going up because all these buyers were piling in. It was just going up because there wasn't anyone selling their Bitcoin. Now, the last thing I want to say about technical analysis is that sometimes it's very self-fulfilling, right? If we have all these people that believe that when the price hits $29,000, it's going to go up, all these people are going to buy more Bitcoin when the price hits $29,000. Now, when a lot of people dive in and purchase something like Bitcoin, we naturally see the price go up. You can see the volume will go up. And as all these buyers come in, supply and demand tells us that as the demand goes up, we're gonna see the price go up, okay? And so this can be a very self-fulfilling thing, and there's a lot of debate out there about this on whether or not everyone is just looking and buying at 29,000, and that's what's actually causing that bounce. Regardless of what it is, there's still money to be made. So let's look at a few simple charts that you can use as you're getting started in this to identify trends. Now, the first one we're gonna look at just to get us started in this is called a trend line. And I'm sure you've seen people draw these, and sometimes they draw crazy looking trend lines that don't make sense to anyone but them. But if you click over to here, a trend line is just a line that the price seems to be bouncing off of whenever it hits. So if we go and look right here, we can almost draw a pretty steady trend line right about there, for example. And something to be said about this trend line on the top. You can see right here, it seems to be like it's in a channel of some sort, right? And if you were watching these charts, you would have a purchase whenever it hit this blue line, right? All the people that purchased when it hit this blue line made money. And then you would have a sell whenever it hit this blue line, right? A lot of people sold when it hit that blue line. And you would continue doing that until you saw a breakout, meaning something like this, where the chart is invalidated, it's no longer in that channel, and that channel no longer applies. But you'll see a lot of patterns like this throughout crypto in a bunch of different currencies, and it's well worth watching. The next one that we'll look at is what's called a death cross. And what this looks at is it takes an idea of where crypto has gone in the last 50 days, and it compares it to how crypto has gone in the last 200 days, and it tries to establish a trend. So the way we're gonna do that is we're gonna click indicators right here, and we're gonna type in MA. Basically, we're looking at averages for the past 50 days and 200 days, and we're seeing if they're crossing. Now, to view death cross, we're gonna go to indicators right here. We're gonna type in MA cross, and you can see right here, it's gonna pull up right there. Now, what this is we're gonna look at these averages. So each of these lines right here shows the price of Bitcoin for the average time before it. So we're gonna go right here and we're gonna actually change these to the shorter length being 50 and the top one being 200. This is probably the most common one traders will look at. And you can see there's these charts right here, okay? There's these lines. And what these lines are is this green line is called the 200-day moving average, meaning at any given point in that line, that's what the price was for 200 days on average before that point. So right here is the price of Bitcoin for the preceding 200 days averaged out. You can see it's kind of steady. And then this orange line is the price of Bitcoin for the last 50 days. So we're squeezing up our time frame. And what we're looking at is, hey, is the general trend being broken in the short term? Is there a short-term breakdown in price of Bitcoin? And we'll find out by the cross, meaning when does this 50-day moving average cross over the 200-day moving average? And when it does, a lot of traders find that to be a bad sign, meaning that at least the mid-range trend is going down or up. So you can see right here, if you would have bought during this death cross, right, when it crossed up, the 50-day went above the 200-day, that might be a good sign. And you can see right here, you would have made some good money. And then you might start selling if you see that 50-day move below the 200-day. And you can see right here, once it did that, the price went down still quite a bit. A lot of traders sold when they saw that. And once again, perhaps a self-fulfilling prophecy. The next one I want to show you is my favorite one by far. This one has been so incredibly accurate for me. It's mind-blowing. Anytime I see it, I get super, super excited. I've even dreamed about it before. But what it is it's called an ascending triangle. And you can see right here what starts to happen is you kind of get this line across the top, where as the price is going up, every single time it hits that line, it starts to go down again. But it doesn't go down as low as it did before, right? So it hit this line, you can see it goes up and then it hits that line and then it goes down and it goes up and then it goes down again, but this time it goes down less. You can see it hits a line that's higher. It hits a price that's higher and starts to go up again. Once it hits that top line, it goes down again, but once again, it ends up bouncing higher than the previous time. And again, here you can see it bounces higher and it bounces higher all the way until it kind of locks itself in this tiny little corner where it can barely move, right? The price can barely move if it's going to stay in this. And once it gets to the corner of that triangle, you'll see a massive breakout. So here's a blurry but image that you can still tell what's going on that I found on the web. You can see right here, we're getting this triangle, it's slowly going up and up, and then you see that massive breakout. It's almost like this coil has just gotten so tight and suddenly it's released and it just shoots up. And I've seen this happen dozens of times in the crypto markets. Like I said, it's my favorite signal to follow. I put the most money in whenever I see this one because it's very easy for me to understand what's happening. You can just tell how the sentiment is working, and you can almost see the energy getting ready to just blow up on the upside. The next one that I like to look for, and this is a bearish signal, meaning when you see this, typically it's a bad sign and it means the price is about to go down, is called head and shoulders. And you might have heard of this one if you've been in some crypto groups. It was recently seen in the Bitcoin chart, which worried a lot of people. But what it is the price starts going up and it goes up and up and up, and then it does a down. So you can see a down dip right there. Then it goes up again, which is great. Then it goes back down. But when it goes back up, it doesn't get back up to where it was before. So it doesn't reach its old height. Instead, it gets somewhere close to where it was before. So you can see that right shoulder matches the left shoulder. It won't always look perfect like that, but this is the idea. And then it starts going down again. And what it essentially told us is this price was going up. The price of this crypto was going up, but as it was going up and down, it failed to reach the same highs that it had before. And it basically is a trend change where the trend is generally going up, even though we see the chart kind of being up and down, the general trend is up. And typically a head and shoulders pattern is a change where the trend is suddenly, generally going down. So you can also flip this upside down, and it's called a reverse head and shoulders, and it's a bullish sign that the price is going to go up, right? We see the price going down, 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 and then suddenly it changes direction, and the new price direction tends to be up. And the last one, with another reminder that we're focusing on the simple charts. These can get crazy complicated with people looking at all kinds of different statistics and things like that. But the last one I want to look at that's just a simple one that you can understand is a channel. So we talked about this a little bit earlier. You can see there's almost a line that goes like that. When I say almost, there pretty clearly is a line that does that. And then there's another line on the top that's kind of doing something similar, maybe going from there. Or maybe it'd be more accurate to move this down and say that's it, with like a simple little breakout there, or a little glitch in the Bitcoin price. But you can see there's almost this channel, and somebody who identifies this maybe right here, or even on the third one, can start buying here, selling here, buying here, selling here, right? Buying right here, and then it breaks out. Now, maybe you've sold right here. That's okay. You're out of the play and you haven't lost any money, right? But you can see someone could have made good money by identifying that channel after 2 or even 3 hits on that bottom line and then gone from there. So we're just looking for these patterns. And then as soon as the pattern is invalidated, we pull out. Okay, we say, okay, my hypothesis was wrong, right? That's okay. We don't need to be right every time. No trader is right every time. We just need to be right more times than we're wrong. And just to show you what I'm talking about in terms of all the different charts that traders like to look at, I can click indicators right here and you can see there is literally dozens, if not hundreds, if not thousands of different charts and different things that you can glean from looking at these charts. These are the basics. Now I want to talk about two people that I really think you should be following. If you're going to get into reading charts at all, these are the names to look at. The first one is someone named Pentoshi or Pentosh1 on Twitter. And you can see they've got 522,000 followers. They constantly tweet about the charts, and I have been amazed how many times they've been right. So if you want to learn charting and then see some confirmation come from someone like this is a great person to follow and get a good idea of how charting works. They also teach it for free, and I believe they're in the process of creating a Discord group where you can go and learn this for free from them. And the last one is another Twitter account who also has a YouTube channel called Blockchain Backer. You can see with 240,000 followers. His YouTube channel is very, very focused on showing these charts that we're talking about and helping you understand what you're seeing in the charts. You can see almost every video focuses on charts and what they're saying to us and what the story is that they're telling. So this is how crypto charts work. The things to remember here is no one's right every time. We're just trying to be right more than we're wrong. The second thing is no specific chart or no specific pattern is perfect, and you'll never find one that perfectly always identifies what's happening. And so you need to have your eye on a few that seem to work. And when everything kind of lines up, that's when maybe it's a good time to buy or sell or make a decision. And lastly, as with everything, we always like to end with this: don't put money into this that you can't lose, because a lot of people lose money, especially in the beginning. Now, one last thing, if you're new to the world of crypto and you're trying to learn crypto without all of the hype and you want to just hear it from an honest man's mouth, this is the channel for you. Go ahead and click subscribe.